Toll Brothers. So looking to potentially buy some put options that would expire either at the end of 2024 or beginning of 2025. Toll Brothers has been an incredible stock the past 5 years. The company's put up tremendous numbers, and their margins have been great. Profitability has been great. Revenues have been great. The backlog's been great. It has started to, their backlog has started to fall recently. But, I mean, the numbers have been pretty extraordinary for Toll Brothers for years now at this point in time, okay? But, with that being said, they're in a bit of a pickle, and this pickle could unwind in 2024, and that's not going to bode well for a stock that's at literally all-time highs in the history of the stock, okay? So, there's a lot of bad situations that can happen for Toll Brothers. One is rates go down. Now you may say, well, that would be good for a home builder like Toll Brothers, rates go down. You could say that, but the problem is, the main thing that's been benefiting Toll Brothers and all these home builders is the fact that inventory is on the floor right now. Inventory is about the lowest you've pretty much seen in many markets, certainly in decades, if not ever. It's incredible because most people are locked in at 2 and 3% mortgages, if not 4% mortgages, right? And with mortgages of 7% plus right now, they're just not even considering moving. So like, I don't want to list my house right now because, you know, I don't want to move on my mortgage right now and then go from a 3% mortgage and buy something and then have a 7.5% mortgage or a 7.2% mortgage. People just don't want to do that. So if rates go down, inventory will loosen up, which would be bad for the home builders. If rates go up, then affordability goes down even more. Now, these home builders have been able to take this hit so far. I don't know how much more they can take the hit. Let's just put it that way. Everybody has their limits, okay? Now, there's another scenario where the economy gets bad, job losses start coming in 2024. If that happens, obviously home sales are going to go down. You know, you can look back at past times. That's just what happens, right? And then lastly, the stock market's been tremendous in 2023. And that's great for Toll Brothers numbers currently because at the end of the day, Toll Brothers customers specifically pay very close attention to the stock market. These are higher net worth individuals. Toll Brothers' average home is somewhere around, let's say, $1 million or so they sell. So if the stock market goes down in any substantial way in 2024, for whatever reason, Toll Brother customers will pull back. That's something we saw in 2022 when actually rates were even much lower than they are now. Toll Brother customers started to pull back in a major, major way. Listen to the Toll Brother conference calls in the third quarter and fourth quarter last year, in the fall quarter, in the summer quarter. It was depressing. And the reason being is a lot of Toll Brother customers saw the stock market just going down and down and down. Their portfolios start to go down and they start saying, do I really want to go buy $1 million house right now, $2 million house? I think I'll wait on this right now. But with this year obviously being a great year for the stock market, obviously a lot of people's portfolios are feeling a lot better and they're feeling more confident. And remember, going to buy a new home, especially in the $1 million bracket or above, it's a confidence play. That's what it is. It's a confidence play. And so with the stock market blasting higher, it's great for Toll Brothers. But if you do have, for whatever reason, a reverse of that, it's going to be very bad for Toll. That's why I look at it as a perfect hedge, because Toll stock always falls when the stock market falls in any substantial way. But on top of that, their customers pull back in a substantial way. That's why I look at it as just a amazing hedge for 2024, just in case the stuff goes bad. If it doesn't, that's perfectly fine, because that means my long positions will be printing money in regards to this one. And do keep in mind, Toll Brothers is a stock that's topped way before the economy was into recession in the past. If you look back prior to the great financial crisis, Toll Brothers stock topped in the summer of 2005. No one even got really concerned about the economy till 07, but it was really 08, and that's when everybody started to freak out. So just keep that in mind. Even if you feel like the economy is going to be fine for, let's say, the next 3 years, there's a high probability, or possibility, I should call it that, a possibility that Toll Brothers stock could top literally this year in 23. We'll see, okay? I just look at it as a very attractive hedge, and I hope it loses all its money if I, am going to do any hedges, because that will mean likely my long positions did very well. Oh boy, what stocks am I buying or planning on selling? We are talking public account here today. I haven't talked about public account here in a few months, and I thought let's go ahead, show everything across the board in regards to public account. What I'm up on, what I'm down on, positions that are doing really well, positions that are doing absolutely horrible. We're going to go through it all in this video here today. I'm going to disclose what stocks I'm planning on buying more shares of, what stocks I'm planning on selling, maybe some new potential addition ads. A lot to go through in today's video, so I took a while to prep this one. So I appreciate everybody being here as always, and let's just jump straight into it, folks. Yeah, I appreciate everybody that subscribed to the channel. Hope you enjoyed today's video. Let me know if you do, and also if you're looking to apply to join my private group, check out the pinned comment down there. You can fill out an application. We can see if you're a good fit to join us in there. Okay. Alrighty, so starting off here at the top, Elf on a shelf. It's my best stock, certainly, of the last several years. It's done absolutely tremendous. By the way, the public count started this about probably almost 6 years ago now or so in regards to public count. So we've been just kind of rolling it. Right now, we're sitting at about $1.7 million on this portfolio overall. The Elf on the Shelf's been extraordinary. I used to own a lot more shares of Elf in this account than what I own currently, and I regret every single share I've ever sold of Elf. Every single last share. I took a ton of profits in Elf, but the amount of profit I could have taken if I just held through, oh my gosh, it would have been ridiculous. So nonetheless, folks, Elf on the Shelf's done tremendous for us. Now, overall, in terms of buying and selling, this is a tough one because the stock's done tremendous. 252% obviously in the past year. That's intimidating to buy a stock up that much. But honestly, whatever stock's up or down in the past year is irrelevant. It all really comes down to valuation. Now, you're going to see for all these stocks, PE, this is basically based upon what 2023 numbers are expected to be, okay, in terms of PE ratios, not next year, not 2024. So Elf on the Shelf's trading at about 57 times what 2023 expected numbers are. You know, that's very rich, but the company's had ridiculous growth rates. I mean, the company's been putting up quarters where they're growing 70, 80, 90%, like insane, right? I can't really buy more shares of Elf right now just because I'm uncertain about if these growth rates are sustainable, to be honest. Like, they've been putting up such insane numbers. On the flip side, am I planning on selling my Elf shares and taking my 1,700% gain and running out of this one? No. At the end of the day, when you have a stock that you've regretted selling every single share and the company just executes better and better and better than you ever anticipated, I thought Elf would be a stock I'd probably double my money, maybe triple my money on, not like 17x my money or so. Like, that's ridiculous, right? So nonetheless, I can't sell Elf, okay? Alrighty, next stock up here, you guys might know this one. It is Tesla Maesla. So Tesla Maesla has done us absolutely tremendous. We're up 969% on that one, up $380,000, right? This is the second biggest position in the portfolio overall, right? Tesla, let's call it the way it is. They're going through a very tough time short term. And when I take tough time short term, it's just their growth rates are held back, okay? Not a tough time as in like other tough times other companies have to go through where their revenues are going down and like, you know, their business is a complete disaster. For Tesla, all it is a story of margins are getting hit short term. They've had to do a lot of price adjustments and interest rates are working against them in a massive way, right? So Tesla's still a phenomenal volume grower, still a phenomenal revenue grower, right? But in the short term, margins are getting hit, profitability is going to get hit. We all know that, right? So you have to kind of take Tesla apart from what's going on short term versus what's going on long term with EVs, the EV revolution, obviously, the electric charging supercharger network, obviously on the AI side when it comes to self-driving vehicles, and Tesla's just in front of all those major technology shifts right now, right? Now, in regards to Tesla, am I planning on selling, buying the stock? So in regards to Tesla, I can't buy the stock right now. The stock trades at about a 72 times this year's numbers, 2023, right? And at the beginning of this year, I actually was buying Tesla stock, but that was when the stock was less than half of its current price, right? So I was buying it based upon like 30-ish or 30-something this year's numbers, basically, right? Well, that's very, very attractive. At 72 times this year's numbers, I'm a little more wary of that, right? And so I'm very well aware of several different things that are holding Tesla back in the short term we obviously talked about. I also am actually concerned about the robotaxi network. A lot of people are predicting that's going to be a huge profit generator right from the go. I'm not so sure of that. I think that could actually be a holdback for the first couple of years of ramping that. Very rarely you can ever launch a business and right away it's making money. I wouldn't be surprised if Tesla loses money initially from the robotaxi fleet as they get that out there, whenever that happens, right? Which they're going to have to go through major legal processes across many different states and cities and countries if they want to have it in multi-countries, right? So when I look at Tesla, very certain about the long term of Tesla and confident. I'm a little more concerned about the short term in regards to Tesla, right? And when you have a lot of concerns for the next year or two, and the company's trading at 72 times this year's numbers, right? It's not the most attractive buying opportunity out there. If Tesla, once again, was trading at 20 or 30 times, it's a whole different ballgame, right? And that's what Tesla was trading at the beginning of this year. So the risk-reward profile in Tesla is just not nearly as attractive now as it was at the beginning of this year. And that's something we're obviously having to deal with. The one really, really exciting positive in the short term, well, there's really two. One is Model 3 refresh, right? That's exciting short term. We'll see what that produces for numbers, but it's exciting. And the other exciting thing is Cybertruck, okay? So yeah, Tesla, always a difficult one to kind of value this company and try to figure out, like, is it a good deal, bad deal, an okay deal, things like that. And right now there's a lot of stocks tugging at me right now to buy them, right? And so when I'm up so heavily on Tesla and the valuation's like, kind of where I'm at with Tesla. Now on the flip side, if you haven't built a position Tesla, I could understand folks buying it out there, okay?